A fairly decent analyst went on TV today, and while overall he is credible with Tesla stock, it's a different story. And even the TV hosts really pushed back against him, and they actually did a great job. He is certainly nowhere near as bad as Gordon Johnson, who said sell even right here. Tony just said hold Tesla stock, but then he switched to sell Tesla stock. Then Tesla stock really jumped, although he did say sell here, and Tesla stock did go down, but his overall Tesla stock return has been minus 9.47%. And now let's dive in.
Next guest says Tesla will need to lower prices even more this year to hit volume targets. Bernstein analyst Tony Sacconaghi joins us now with an underperform rating, $150 price target on Tesla. Tony, why? It doesn't look like they have much of a demand problem here.
Even the TV host here, Sarah, disagrees with Tony by pointing out that there is no demand issue really, and that is because she is right. We may, however, have high interest rates. We may have to go through a recession, and in China, things looked really ugly earlier. Hopefully that gets better, but I'm not counting on it. These are the problems really, not because Tesla is just struggling by itself alone and all other automakers are running laps around Tesla. That is not what is happening. All other automakers are hurting just as much. Actually, they are hurting a whole lot more. Kia admitted that they don't want to lower prices because that would destroy residual values of their cars. And a lot of these companies have huge financing divisions which just simply cannot lower prices. It's too difficult for them. Tesla does not need to really worry about that. Tesla is still a new manufacturer, and each year Tesla produces so many more cars that when you look at how many cars Tesla has out there, it's not that many. And also, Tesla is not really in the financing business. At least here in Canada, all of the loans are not held by Tesla, they are held by banks. So in a way, I guess Tesla dropping prices further could escalate the banking crisis even more, because if cars that are out there lose value, the bank's assets also drop if suddenly people cannot repay these loans because the loan is now bigger than how much the car is worth. Relatively speaking, there are not many Tesla cars out there, so it's not really a big impact.
Well, look, I'm not so sure that that demand is really strong. If we look at what happened, they cut prices materially in January up to 20%. And sequential growth was 4%. The last couple of years, it was 1% and 2%. So you took these very large price cuts. Consumers reacted to them, I'm sure, strongly initially. And yet seasonal growth was pretty in line with historical levels.
While at first glance, that certainly appears to be the case, because when you look at the sales, this is Q4, this is Q1, and then these are different years, you can see that that's roughly right. However, the moment you zoom out a little bit more, you will realize that, oh, yeah, actually, that was not always the case. And the growth was lower before. It's a little bit higher, not by much this time, but it's still a little bit higher. And also, you have to keep in mind that initially in the US, no one was really buying Teslas in the first few days, the first week, and you can add maybe the second week as well, because no one had the $7,500 credit. It was uncertain. Why would you buy a car if you think that most likely Teslas will soon get the $7,500 credit? The first 2 weeks, you still had these crazy elevated prices. How many sales do you think were lost because of that? A lot. So we will see what actually happens this quarter, and then if it's still the same, then you can perhaps make that conclusion, but not yet. Right now we can guess, but we just don't know.
And as we look forward, inventory grew, so they weren't able to sell everything that they made. As Phil mentioned, we're going to have lower incentives or lower credits from IRA for sure on the standard range Model 3.
That used to be true, but there's this new government document that has been published, although officially it's not published yet. But if you look at this, there is a way for Tesla to still keep getting the $7,500 credit, even though that Model 3 technically should not qualify. But there's an exception that the government could make to still give the consumers that $7,500 credit. And also, Tesla will be building a new battery factory in the US in partnership with CATL, but Tesla would fully own that factory and it would only produce batteries. And this is what Tesla could use to talk to the government and say, hey, look, guys, we are building a factory right here in the US. Why do you want to punish us right now? Gary Black also thinks that is certainly a possibility. So we don't know for sure. Tony is a little bit too bearish there. Or to be more correct, he's not up to date. Because this just happened. This just came out 4 days ago.
Potentially on other models, we're waiting to hear exactly what those credits will be. And if we look at lead times for vehicles, other than the Model Y in the US, you can get a Tesla within 2 to 4 weeks pretty well anywhere in the world. So there isn't much backlog. As I mentioned, there are about 100,000 cars in inventory right now. And so it doesn't feel like demand is fantastic right now. And my guess is as we progress through the year and there's more and more competition, there are 150 new EVs launching in China alone this year, Tesla will likely have to lower prices to make sure it hits its volume targets.
Yeah, but also in the long term, we expect Tesla to keep dropping prices as Tesla finds new ways to lower the costs. And also right now, the commodity prices are dropping. Every day still, lithium price is lower than the previous day. Morgan Stanley also did a report not a long time ago showing that the inventory for batteries is pretty high, and they basically explained that probably the prices are going to keep falling down. And speaking about demand overall, I have been talking about the Tesla's next generation vehicle, that Tesla needs to get a cheaper vehicle out, especially in China. Other places maybe it's not needed as much. That point, yeah, I think is valid. And that will be a way to stimulate the demand for Tesla.
Yeah, your lead time charts in your report today, Tony, are interesting. And you say that you think that the competition has deep pockets and are not going to back off. Some auto analysts argue that it's that conflict between the ICE business and the EV business that's going to create really tough choices for legacy automakers. Why do you think that's not the case?
That is actually a great question. A big shout out to that reporter for asking such a good question.
I don't disagree that there will be tough choices, Carl. I ultimately think at the end of the day, though, companies are being valued on the future, and the future is electric vehicles. And so you've had companies like Ford say, we're going to get to 2 million electric vehicles by 2026. And I think, quite frankly, that's come hell or high water. Yes, they lost $2 billion in electric vehicles this year, but they made more than $10 billion in operating profit in their ICE businesses. So they can continue to subsidize that business. And the market is basically saying, unless you're credible in EVs, we don't want to give you any kind of valuation. And so I think you are going to see leading OEMs like the Volkswagens of the world, like Ford, like GM, who have pretty robust cash flows from their legacy businesses. If they have to take down overall profitability to show that they can be viable in EVs, I think that's the choice they're going to make.
Yeah, but the question also is, for how long can these legacy automakers keep making money from these gas-powered vehicles? Because Tesla is growing its production very fast, and that puts more pressure on the whole market, including gas-powered vehicles. BYD is growing incredibly fast in China, and that's where a lot of profits come for a lot of these legacy automakers. They come from China. And if Tesla drops their prices even more, no sane person will look at a gas-powered vehicle price and at a Tesla and be like, yeah, I think this makes more sense. Like Stephen Mark Ryan would say, this matters.
On the other hand, there's a narrative, Tony, that Tesla's leading the pack on the price cuts, and it's hurting the other automakers even worse than it's hurting Tesla, while at the same time they have some pretty ambitious plans to ramp up production in Mexico. They've got the first mover advantage, and the deliveries today show that the price cuts are actually working.
Another good question and good pushback. Sarah is on fire today.
Yeah, I mean, look, I think price cuts in a hyper-competitive industry is generally bad news for everyone. So, last year, Tesla's automotive gross margins were 27%. This year, I think consensus thinks they're going to be 21 and a half. and that, and again, we think there could be incremental price cuts. So Tesla is certainly feeling the impact from its own price cuts, and certainly other vendors are. And that's the dynamic that we worry about, is in a really competitive industry where price matters, price cuts are detrimental to total industry profitability. And I think that's what we're starting to see and will continue to see. And that includes Tesla and other incumbents. The good or bad news, I guess, if you're other OEMs, is they're pretty deep pocketed.
For now they are, and they are not transitioning to EVs fast enough. Also, you have to keep in mind that Tony is an analyst, meaning he gives a 12-month price target. He's not giving you a 5-year or a 10-year price target. So in the short term, of course, Tony could be totally right here. But in the long term, I believe the next generation vehicle is going to outsell all of the competition by multiple times, just with single models, basically. And then I believe Tesla will solve full self-driving, and you don't see Tony talk about that in the long term. Overall, I think Tony is a fairly good analyst to listen to overall, to double check if you have any blind spots. Turns out we don't have any, but it's good to double check. He is actually a fairly good analyst. Gary Black said that Tony is a #1 analyst for Apple, although he's not that good with Tesla, but still overall as an analyst, he's not bad. It doesn't seem that he just makes up stuff like Gordon Johnson would. So this is the Tesla stock buying opportunity. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.